Folks, if you are a Palantir shareholder, you need to watch this video. Palantir is bleeding, down nearly 20% over the last 5 trading days. And in today's video, we need to discuss, number one, what is going on. Number two, something if you are a shareholder of Palantir, you absolutely need to know, the facts. And number three, should you buy, sell, and or what is the strategy to potentially make money off this downtrend? And what is a concrete way to make money on your Palantir holdings without actually selling them? Well, we're going to get into all of this, but first, as always, if you're the one taking the ultimate risk, you got to be the one doing the ultimate frisk. Always do your own due diligence on all ideas presented. So what is going on here? Why exactly is Palantir doing the downward dog? Well, for starters, you need to know that Palantir will always experience significant highs and significant lows. We've been huge fans of this stock even when it was in the $7 region, and the entire time we've liked it, it's been up and down aggressively, and you simply have to accept that if you're playing this guy. There's different reasons and there's different seasons, but this guy goes up and it goes down. If you are a Palantirian shareholder, you got to accept that. But the reason that it's going down right now is because treasury yields are surging. When treasury yields go up, it drives money out of stocks. People say, hey, why risk it with volatile stocks like Palantir when I can earn risk-free returns over here? And really what people are saying is, hey, other people are going to move money out of the market into treasury bonds and treasury bills. So what I'm going to do is I'm going to go ahead and move my money first. And that creates that self-fulfilling prophecy where rates go up just a little bit, expectations go up just a little bit, and all of a sudden, money gets pulled from everywhere. And remember, Palantir has a beta of nearly 3, which means it's 3 times more volatile than the broader market. So that means when the market sneezes, Palantir basically catches a flu. When the market dips, Palantir can react about 3 times as much as the broader market. But of course, when the market goes up, Palantir can react 3 times as well. 2, here's another thing to keep in mind. So Palantir has been on a massive run the last couple of years, and a lot of new participants literally bought in for the first time at $70, $80, $90, which could be fine, but they are often the first to panic sell when the stock breaks down. And so you're also seeing some of those guys go and say, you know what, I'm not going to stay in this. I don't believe in it anymore. I believed in it at 80 when everybody was buying it, but now that it's at 60, I'm going to panic sell. Another reason that the stock is breaking down right now is because of the break of key support levels. Once Palantir share price broke below critical technical support levels, well, automated selling by algorithms and traders exacerbated the decline. This is common in high volatility stocks when they breach key price points, and that's why taking inventory and understanding support levels is so critical if you're trading the stock, especially on a short-term basis. However, you need to know that bigger picture, this is all noise. Whenever I own something and it's dipping, I always like to focus on the facts and the underlying thesis and ask if something has changed. Let's talk cold hard facts with this. So number one, you look at the revenue growth. Over the past year, Palantir's growth rate jumped from 20% to 30%. That's a big deal in this market, especially for a company that has already scaled as far as Palantir. They beat almost everybody's estimate. But then number two, you got to look at further scalability. For every 30% increase in revenue, their income grew by nearly 900%. That's because their operating expenses only went up 7%, and that's the kind of efficiency that we can only dream about in most places in the market. Number three, free cash flow. A lot of people don't pay attention to this one, but you need to. Palantir generated $1 billion in free cash flow over the past year, giving it a 40% margin. Combine that with their low capital expenditures, just $14 million on $2.6 billion in sales, and you've got a lean, mean cash printing machine. And when something prints cash, well, the underlying stock attached to that eventually prints cash as well. Number four, you got to consider the rule of 40. The rule of 40 says that if your revenue growth rate plus your free cash flow margin adds up to 40 or more, you're looking at a high quality growth stock. Palantir, well, they're scoring 70. That's elite tier, folks. They have about 30 points of margin here, and they would still be scoring impressively. They would still be considered a high quality growth stock. This is a testament to how efficient this business really is. Also keep in mind that half of Palantir's revenue comes from government contracts. Government contracts are the ultimate safety net. They're recession proof, they're sticky, and they're growing like wildfire. Palantir isn't just securing contracts, they're becoming indispensable to governments worldwide. Ones that need more and more spending on AI apparatuses. Apparati. And we're talking government. The other 50% of the company is very, very much sticky as well, just maybe a little less sticky. Palantir has ingrained themselves in corporation after corporation, and most of these clients are actually scaling Palantir's platforms, which means not only are their contracts sticky, but they're growing. Palantir's AIP operating system is like the NVIDIA of software, essentially a monopoly in its space. Nobody is doing what Palantir is doing at the scale that Palantir is doing it. And that is just a fact. You can look at the stock price all you want. You can complain that it's down. You can get overly euphoric when it's up. But at the end of the day, the facts are the facts. Palantir has created a brand new industry, and Palantir is the only one playing in it. That being said, I know that it's easier said than done, but you need to be able to manage your emotions during these dips. You need to remember why you took a position in Palantir. If you took a position in Palantir and something changed, well, your position can change, but if nothing changed, then why are you changing your position? You're changing it because of emotions, and emotions are not a strategy. The stock market does not care about your feelings. So remind yourself of the fundamentals here: revenue growth, scalability, government contracts, trends, exponential growth, track record, company testimonials. The reasons to be bullish on Palantir are endless. When you take a position in Palantir, you need to know that the stock has big downturns, right? And it's always been like this. We have liked this stock. We begged people to look at this stock at $7. And even with its big dip the last couple of weeks, well, it's still almost at a 10x from those levels. So here's what separates the long-term successful players from the rest. Long-term successful players balance their long-term views with smart short-term strategies. It's not about ignoring that a dip is happening. It's about recognizing it for what it is: short-term noise. Think of it like driving through a storm. You don't pull over and abandon the car just because the weather gets rough. You slow down, you focus on the road, and you remember that the skies eventually clear. That is what emotional discipline is all about, and you need to have that if you're trading within the stock market. Now, that being said, look, I know the emotional game is hard to master. I've gone through it myself many times. I've had many stocks, many investments that went through some dire conditions. I've been through fires and I've been through clear skies. Hell, speaking of fires, just a few days ago, my house over in the Hollywood Hills was pretty damn close to the fire path. I've done well, but not well enough for a $4 million house burning down, and being at the mercy of insurance companies isn't going to F me up mentally. I lived in this house for years. I left and put good tenants in there who pay on time most of the time with a good profit margin. And the idea it could just burn down all of a sudden lost me some sleep. Luckily, the firefighters put out the fires, and I'm super grateful for all of those guys. But the reason this relates to Palantir is because when I bought the house, I knew that was a risk. My inspectors told me the fire risk was high back in 2020 when I bought this place, and I opted for it anyways. So going back to Palantir, it's the same thing. You have to know that the downside risk is high. It's a volatile stock. That's simply the reality of the stock. If you want something slow and steady, please, please, please do not buy Palantir. It's fine to want something slow and steady. It's fine to be risk averse, but don't buy something high risk and then be upset about it. You bought something high risk because you like the potential reward of that thing. In the case of Palantir, that's upside. Okay, great. So Charlie, what is the way to play Palantir's dip? Well, if you are buy and holding for long-term appreciation to what we see as $230+, then dollar cost averaging, buying over time, and even buying harder on dips may be the way to go. If you're trading off options for a bounce, well, you want to open up Moomoo and take a look at these 70 strike Palantir calls. They dip some 20% today, and they can be picked up at $5.45. Say you have $545 to buy the dip. Well, $545 buys you 100 shares worth of coverage with this option. If you have $545 to buy straight up shares, you're getting less than 10 shares, right? So if you want to take advantage of the dip and are expecting an overall bounce in the next couple of weeks, which I am, then these can be a unique play on that. By the way, if you do want to sign up with Moomoo using our link down below, they have a great offer for our viewers, and you're going to like them a lot. But anyways, a great thing to keep in mind about buying calls on a dip is that you simply aren't going to be able to time the bottom perfectly. So don't even try. You do have to play the DCA game, the dollar cost averaging game, with call options to some extent as well. Saying, hey, yeah, I know this might dip more, but if I see an overall uptrend heading into February and March, then I'm going to be A-okay. And if I'm wrong, look, control the risk. That's what risk management is all about. Okay, great, Charlie, but what if you are already in options and they are down? What do you do then? Well, if you're running out of time, you can always roll them out to farther out expiration dates, but you may not even need to adjust them. Like I said, if you're playing off an expectation of a bounce in the coming weeks, then you don't care that much that they are down, and you could DCA to get a better potential return. Now, if your expiration date is next week, obviously you might want to roll those out before the time decay really destroys the residuals on your contract. But otherwise, if you have enough time, you could still ride it out. Even if Palantir dips another week or two, you might be fine. But if you think you need the extra time to benefit from that February or March rebound, well, then you might want to consider rolling it out farther. Now, one big thing that you should strongly consider doing if you own a lot of Palantir shares for the long term is selling covered calls on those Palantir shares, which is something we teach, by the way, in ZipTrader Options, in addition to all the other strategies we present in these videos. The quick explanation on how that works is the following. Let's say you own 1,000 shares of the lovely Palantir, and Palantir is at $64 per share, and you're okay with selling if it hits $90 in the near future. So you sell 10 contracts, and one contract is equal to 100 shares with a strike price of $90 and an expiration date 1 month from now. The premium from selling these call options is, say, $1.50 per share, meaning you earn $150 per contract or $1,500 in total. So what are the possible outcomes in that situation? Well, the possible outcomes are, number one, Palantir stays below $90, in which case the options you sold expire worthless, and you keep the $1,500 premium plus your shares. You can then repeat the strategy for the next month. Number two, Palantir goes above $90. The buyer exercises their option and you sell your shares for $90 each, earning a capital gain plus the $1,500 premium. While you miss out on gains above $90, you still lock in a nice, beautiful profit. Now, of course, look, bigger picture, I do believe that this is a 200 plus stock. And if you agree with me, then it doesn't make much sense to risk all of your Palantir shares on this strategy or to have a strike price or to sell a strike price that's too low. But again, if you do this right, it can be a nice way to add income to your otherwise just sitting there Palantir shares. To be frank with you, Palantir can stagnate for years when we're not in a bull market. I believe that 2025 is going to continue to be a massive bull market after this little bit of red washes away. But bigger picture, you should know this strategy. Using covered calls can provide a very nice income buffer for any portfolio. But it's especially useful if you're just keeping the Palantir share sitting there for many years, which I would argue you should be. And the best part of this strategy is you can rinse and repeat, keep selling those covered calls over and over and over again, bringing in income from that strategy. All right, folks, anyways, that caps off today's video. We covered a lot. Palantir is dipping hard, and I know that that can feel like a punch in the gut, but let's not forget the bigger picture. Volatility is simply part of the game in the stock market and life, and when you're dealing with a high growth, high potential stock like Palantir, you just got to accept it. It is what it is. If you've done your homework, which you better have, then you must believe in its revenue growth, its insane scalability, its recession-proof government contracts, and its dominant position in the AI and software space. And if you believe in those things and you've done the homework, again, this dip isn't a reason to panic. It's an opportunity. And really, in the grand scheme of things, it's no big deal at all. We're down 20% after being up a 10x. Palantir's story is far from over. I believe that very, very truly. And if you believe that too, well, this is an opportunity, not a time to panic.